Hi there, it's Policy Retail Investor speaking here. Welcome back to my YouTube channel. In this video, guys, I just want to share with you my investing idea on Sibanye. Is it a good stock to buy? Well, we'll find out after this presentation here. Just stay tuned and watch the whole video. You'll gain a lot here. All right, before we even begin, we will start with the recent interim results, the recent results for H1 2021 for SibanyeStillwater, because they just released the results. So Sibanye is this core business. Actually, it's just mining. Okay, there's a mining company that mines different commodities. All right, they've this interesting diversified mineral portfolio. All right, so of course we'll be looking at production first of all, and then the revenue, of course, and then the commodity prices, of course. So if you want to check if this company is profitable or not, you need to understand its source of income in terms of the business. How are they making money from their business? They make money by selling what? Commodities. Of course, commodities, we need to factor in what? The price, and then that's where we get the revenue. Of course, revenue, we have to look also the cost. Yeah, you might even go to the cost. All right. So these guys, they have different segment actually. They have SAPGM segment, which is Platinum Group Metals Operations. Then they also have US PGM segment, which is also another Platinum Group Metals operations in USA. And then they also have SA Gold operations. Now, different commodity. They have also gold operations in South Africa, and then they also have new projects that they're actually embarking on, which is another diversification in terms of its mineral portfolio, whereby now they are venturing into lithium mineral and also nickel, which will play a very important role into battery manufacturing for electrical vehicle cars. So this company, it has this exciting, interesting, diversified mineral portfolio. All right, so now without wasting any time, let's just dive deep into the results in terms of segment by segment. All right, now this is the SA segment for PGM operations. You can see here production went up by 42% compared to 2020 H1. So that is represented by the blue bars here. You can see this is 2021, and here we have 2020 H1. So you can see we have this nice rise in terms of the production, which was up by 42% from this report, which I got it from Sibanye website under investors. All right, you can see the black line here represent the average basket of the prices of PGMs, and it's been growing upwards. So prices of commodities, they are going up. If prices are going up, of course, the mining company will be profitable, provided it's increasing also its production and it's controlling its cost quite nicely. So then the company, you will expect it to be profitable. You will expect it to report improved results in terms of revenue, net income. All right, so as you can see here, these prices for commodities are increasing, the average prices for these PGMs, and then you can see production is up. Then now we have this dotted line here, the black line, which represent the cost. From the SA PGM operations, they've been maintaining their costs quite low. You can see there's a decline for cost there. The cost have been controlled quite nicely. Of course, that now means what? Net income will increase if you're controlling your cost quite well, which is awesome. As you can see here, 66% adjusted EBITDA margin for H1 2021 compared to the previous year. It went up by 66%. So that is awesome again, because of why the company is doing well in terms of production, and the commodity prices, they are favoring the business. And also you can see here the costs, they are quite well controlled from the SAPGM operation. So this is South African Platinum Group Metals operation for Sibanye. It's a specific segment for SibanyeStillwater, which is under PGMs in terms of the commodity that they are mining here. All right, now let's take a look at other segment. You can see the segment, it did quite well in terms of production and cost, and also you can see that the commodity prices, which is PGM, they are doing quite well. Now this is the US segment, another operation for Sibanye. Remember guys, you need to understand the company that you're investing in. You need to know them. How are they making money? All right, by just reading, going through their results, their reports, looking at their financial statements. All right, so I'm trying to make it here easier as possible and summarize it, so that if you are a community of this channel here, you are a member of this channel, you are a subscriber here, and you are a newbie to investing, even if you're not a newbie, but you want to improve your skills of research, you can still learn from this channel. All right, so now we'll keep it simple without any complicated accounting terms, just straightforward, simple terms that anyone can understand. All right. So now US PGMs, of course, they're still mining here in US, and US PGM is, I think, it's a very, very important asset to Sibanye because it's one of the largest PGM reserves around the world. Okay, so this guy, in terms of production, they didn't do that much in terms of compared to the previous H1 2020. They didn't do that good due to an incident. I mean, a safety incident that occurred there, and then now they had to stop for 21 days. Of course, now there was a loss there in production because they were still fixing for 21 days whatever happened there. All right, so as you can see, production is sitting there compared to the previous 2021 H1. All right, but overall the prices are still doing quite well, and their costs, they look flat. So of course, going forward to H2, I will be expecting something better than this compared to H2. So they will come back stronger as soon as they are back to production doing quite well. All right, so so far here there's nothing much interesting, but they're still doing quite well in terms of production. You can see it's a bit flat though, but I will expect to see something like this going forward to H2 to show an increase in production from that US segment there. But overall, there's nothing much in terms of like bad performance here. There's nothing much bad here. Everything is so far, it looks good. All right. Then moving on to another segment, which is PGM recycling. All right, they also have another segment which is recycling. The important thing about recycling PGMs, I think Sibanye is actually now reducing its carbon footprint, because now most of the companies, they need to comply with that to save our planet. So Sibanye is actually doing something great here with this business segment, whereby now they are recycling PGMs and then now reducing their carbon footprint. As you can see here, this is EBITDA, the black line here. It's been increasing from this business, which is good. And also you can see the green bars here represent production from recycling, from this recycling business. So they are also producing these PGMs from recycling businesses, and you can see there's increase on EBITDA and also the production there. So this segment is also profitable and is also good for our vision, as the whole world is actually moving towards the green environment. So this is awesome because we're reducing that carbon footprint from the company now, SibanyeStillwater. All right, now if you look at now gold operation now, which is another segment which brings money to this company, that is a gold operation. All right, now if you look at production here compared to 2020 and 2021 and 2020, you can see that production was up by 29%. We had this nice increase here between these two bars, which represent production. So that was awesome. But gold prices, they are kind of declining, lower compared to the previous year on H1 2020, but it's still good because of why those prices, they're still up there, which can actually, it's still even profitable to mine at those prices. So that's a good thing about that. They're still holding at higher levels, even though there is a pullback in terms of the gold price. But the production, it's been up, so it's quite good for Sibanye from this sector here. It's contributing well to the overall profit of SibanyeStillwater, this segment. All right, now let's move on now to check at the revenue and also the earnings per share and other information, which is quite important for an investor who's trying to learn here, the retail investor, and also an experienced investor who need a different opinion. Now here we are having numbers here. Now when we combine all those segments, now these are the figures that you want to see, but you already have an idea from those segments in terms of their performance. You already have an idea overall Sibanye in terms of revenue. Of course, they did well based on those segments from SA PGMs, US PGMs, the recycling PGM from US, and also the gold operation. Then I'm still going to talk about the future outlook of this company in terms of its new projects, which are quite nice. All right, you can see that overall revenue went up by 63%. That is a quite huge number. 63%, double digit from compared to the previous H1 2020. So this is good. And if you look at the cost, they were up by 28%. Of course, here you have to factor in inflation. Of course, inflation is rising, so you will expect costs to go up. But at least that has been offset by that high figure on revenue. And then if you look at earnings per share, they are up by 140%, triple digits compared to the previous reports, which was H1 2020 last year. So this is awesome. I like it. 140% earnings per share increase. That is awesome. So this is awesome. It's great. And then now the dividends, they also went up. Currently now they're paying 8.5 billion in dividends. You can see them. Dividends, they are up to 2 rand and 92 cents per share from 50 cents per share. I will just show you that because previously they were 50 cents per share, but now dividends are increasing, revenues increasing, earnings per share went up. So this is good. And the commodity prices, they are up. Remember, this is a cyclical stock, so it depends on the price of the commodity. But now what I like about Sibanye compared to other mines, they have a diversified mineral portfolio, meaning that now they are mining different commodities. So if one commodity price is going down, then the other one, of course, it will likely to offset the other one which went down by going up, because now they are mining platinum, they are mining gold, and they're also taking some market share on the lithium and also nickel, which are the current projects that they're involved in, which I will show you. All right, now we move on now to the recent operations that are new actually in terms of the future outlook of Sibanye. So I want to show you something interesting here in terms of the lithium, which is the Keliber project in Europe, and also the nickel processing facilities that they bought in France. Yeah, this is the part that I want to show you in terms of the future outlook of this company. You can see that they have this Keliber, which is the mine that will mine lithium in Europe. So of course, we have seen the rise of electrical vehicles around the world. So the popularity of the electrical vehicles, it's here to stay because of why we are moving to now a green planet. Now we are trying to reduce all the energy sources that are damaging our planet, such as the fossil fuels. We want to use clean and renewable energy. So lithium batteries, they will actually play an important role here. So this lithium metal here, this mineral here, lithium, it will do well in future because of why it's used into these batteries for electrical vehicle cars. So Sibanye, it has some shares to this Keliber mine here. They hold some stake there, which is 30% from this mine here, which is in Europe. They also bought some nickel processing facilities in France, which is also another exciting project at SibanyeStillwater, which will add value over a long term to its portfolio. So you can see this company is actually diversified in terms of the minerals that they are mining. Now they are going into another space again, which is the electrical vehicles by selling what? These nickels and lithium, which are used into the batteries for electrical vehicle cars. Again, Sibanye also has uranium reserves in Beatrix and also in Cooks, which is another energy that can be actually used in future, which is clean energy. It's an alternative clean energy which can be also considered in future. I think that will play a very, very important role to our green planet again in future. As you know, nuclear power, it's one of the most clean energy which is widely known out there, which can also come back into the market and do well. So they also have that uranium. So you can see their mineral portfolio is diversified. They mine PGMs, they mine lithium, now they are on nickel, they still have uranium, then they have gold. So in terms of the green energy metals, they are also doing well. So which is a good thing to buy Sibanye so far, but we are not yet done with the fundamental analysis. All right, that's it with the interim results from SibanyeStillwater, and I've just summarized their results in terms of the production and the commodity prices and the revenue. Now I would like to go to one of the things that actually will be a catalyst on increasing these PGM prices in future, because currently now, even though remember, these PGMs, they are widely used into the auto industry. They are used as catalytic converters to these internal combustion engines. So you can see that in terms of globally, the sales of car and the manufacturing of the cars globally, it went down. Reason why, the pandemic, of course, the restriction on traveling. As you can see that now the production for the cars around the world, it's been declining. And of course, most of the platinums or the PGMs, they are being sold to what, to the auto industry for catalytic converters, to be used as a catalyst. So if manufacturing into cars globally it's declining, of course we'll expect a slowdown in the revenue from the PGMs from these mining companies, even though they are not only used to these. PGMs are also used for jewelries and also other industrial applications, but the auto industry is actually a huge source of revenue for the platinum mines. You can see that we had a slowdown in terms of revenue and the sales, car sales, manufacturing from the auto industry globally. But the interesting thing is that if you take a look at the electrical vehicle cars, they've been growing up, they've been going upward, even though the cars that are still using internal combustion engines, their manufacturing has been declining and their sales, they've been declining, and most of the PGMs that are used there. But then if you look at these electrical vehicle cars, they've been increasing, going up even higher. So now the good thing about Sibanye is that the project that they have in terms of the caliber there, entering the space, this market share for this market share, trying to get the market share from this lithium batteries, so that they can get some source of income which is different from the PGMs and the gold from the electrical vehicle cars by supplying the lithium for batteries. So if you see this increasing like that, of course, in my mind, I'm already saying, well, this is good for Sibanye because they also have a mine that is actually mining lithium and also nickel facilities in France, the nickel processing facilities in France there, which will actually they will benefit from this increase into electrical vehicle cars. Then if you look at the future outlook for PGMs, of course, in this hydrogen economy, on the hydrogen economy, this fuel cell electrical vehicle cars, PGMs, they will play an important role here, and also on hybrid. So, and then if you look at PGMs playing an important role from Sibanye on these cars, from the hybrid electrical vehicle cars, and also from the fuel cell electrical vehicle cars, PGMs will benefit here. And then now from the battery electrical vehicle cars, they have lithium, they have nickel. So now you can see their diversified mineral portfolio now, it becomes something very, very, very interesting for them in terms of now competitive advantage compared to other local mining companies, because now they have exposure to different commodities. So you can see that over a long period of time they will still benefit. Even if one commodity is going down in terms of the prices, it can be offset by the another one because of why they are mining different commodities. All right, so we are done with that now in terms of their interim results and future outlook of Sibanye in terms of profitability over a long run with their diversified mineral portfolio. Let's just take a summary on their financial results, their income statements now, because now we've touched their results in terms of production, cost, revenue, and also the auto industry, because they sell most of their platinum or PGMs, to the auto industry for what? It's used for catalytic converters. It's used as a catalyst there to actually reduce the emission of these greenhouse gases which are emitted by the internal combustion engine cars and trucks, etc., etc. So if you look at the income statement, balance sheet, and the free cash flow statement of Sibanye, is quite doing well here, because if you look at the financial profitability now from the income statement, Morningstar is rated 7 out of 10, which is good. This is Guru Focus. And the net margin 23%, return on equity 61%, quite good numbers there. High return on asset 24%. This is awesome, quite awesome. So I like it. From the interim results in terms of production and also from its diversified mineral portfolio, it's good. And then you come back to the financial statements like income, balance sheet, and the free cash flow is also up, which is a good thing. And then you look at their debt level now here in terms of the balance sheet. You can see that that's the first thing that you don't want investing into a company with a lot of debt. But of course they had huge debt initially here with quite few cash into their balance sheet. Of course here they were buying some of the companies here, mining companies, which were not profitable. So of course that debt, it's taken from the banks. But now ever since they've been profitable, this debt has been declining. As you can see here, with this decrease in debt, but then the amount of cash which is involved in, which is in their balance sheet, has been increasing. Look at the cash. Cash is green bars. Remember, cash is green bars. The red bars is debt. Cash has been increasing. Debt has been going down. If you come to their income statement, look at the revenue. It's been increasing nicely, exponentially. That is awesome. And currently now we're seeing an increase into the net income. Look at the net income where this green bar now coming back. You can see that green bar is coming back. And in future, of course, I'm looking forward to see more green bars going up there, which is good. So the stock is quite doing well in terms of the financial performance. When you look at the financial position, balance sheet is doing well. And if you look at their income statement, it's doing well. Even their free cash flow statement, it's also doing well. Of course, in the free cash flow statement, you want to see cash flow from operating activities. Of course, operating activities is SA PGMs, US PGMs, the SA gold operation, and then the US recycling business. And of course, now they're currently involved into the Keliber, which is lithium operations, and also the nickel operation in France. All those, the lithium and the nickel, they are also in France. They're in Europe, the one is in France. So that is good. So if you look at this free cash flow, the green bars is increasing. This is a free cash flow. The amount of cash that is left after the company has paid its operational expenses, you want that to increase. The green bars, you can see they've been increasing, but they started flat, slow, but now they've been increasing. And then the white bars are also increasing, which is the operating cash flow, which is cash flow from operating activities. You want that to be increasing too. All right, and of course it's increasing, and then you could have predicted that after you just looked at their results from different segments, that of course this money here will increase, which is cash flow from operating activities, because those different segments, they were doing well while I was there on the interim results, of course. So it was easy to predict that one before you even come to these income statements there. Remember, this is summary on Guru Focus. You can just go in details to the specific numbers on their income and balance sheet and cash flow statements. All right. So that's it with SibanyeStillwater. Now let's take a look at the price action of SibanyeStillwater. These were fundamentals, remember. So now it's time to go to the price action. Fundamentals, they look good. Let's take a look at the price action of the stock. All right. So the stock is quite doing well in terms of the price action. If you look historically, we were in an uptrend actually. The stock went up on daily, came back. That was COVID-19, the crash there, and then it went up. After the crash, that was a recovery here. Of course, this recovery was also boosted by what? Increase in commodity prices. Platinum was up, gold prices up. So that was actually a huge boost for the stock in terms of profit and their revenue. Currently now we are in a pullback. As you can see, the stock is pulling back to the previous structure here, and is pulling back in terms of in a form of a channel. You can see it's in a range but pulling back. Now it's back on this level of support here, which was previously a resistance, and I'm seeing some important features here in terms of the chart patterns. Looks like we're at just a double bottom here, and currently the price is up there, rejected from this level with a double bottom. So if the price break this current counter trend line here within this channel, it will be a great thing to add more shares, but you can still start buying here at this level here, because even this green bar here, it's a significant level of structure here. So it's good to start also buying shares here if you have confidence on this company that in future it will do well based on the results and also based on their fundamentals, which I've just explained. I've just summarized actually. You can still do your own due diligence and go deeper and look other things that you think they are important to this research. All right, so buying here, I will be doing that for myself, and also when the stock breaks this counter trend line, I will be looking forward to add shares, which is a good thing to do, buying companies with superior fundamentals rather than buying penny stocks which have no fundamentals that you can rely on. All right, so price action and fundamentals, actually they are all talking the same language from what I'm seeing here, because if you go to look at the weekly chart, you realize that this stock is in an uptrend. It was once in a range, but as they are growing their balance sheet and increasing value, you can see the stock was in a range here, ranging here, But then as they are growing their balance sheet, creating value, we just broke out of this range and the stock went up, and I believe we're still going to continue up higher going forward in future, provided those commodity prices they stay up there for a long period of time. All right, but however, there's also risk involved with Sibanye, of course. With the current chip shortage, semiconductor shortage out there, so that will affect the manufacturing of the cars out there globally. Of course, once this productions in cars keeps on declining, of course, that will affect the PGMs sales. So that is a risk that I'm seeing. Also, the semiconductor shortage that will also impact that. But in terms of the electrical vehicles, of course, we'll have hybrids. So platinum, I think PGM can still also, use advantage of that. They can still benefit from that and take advantage of that, of the hybrid cars, of course, and also the fuel cell electrical vehicle cars. So I think they will also do well on that one. But currently, the biggest risk is the semiconductor shortage, which will affect the car manufacturing globally. Hence, PGMs will also be affected. All right. If you like the video, you like the content, please do leave a like button. Click that like button and also do leave a comment in the comment section below and tell me what you think about this analysis, what you think about this talk, what's your opinion. Let's talk. All right. I will see you guys in the next video. And remember, none of these videos here on this channel constitute as financial advice. If you're looking for a financial advisor, please do find yourself a registered guy, a qualified guy who's doing that thing for a living. All right, I'll see you in the next video, guys. Bye. Cheers.